have you back once again on Davos Direct and the Davos Debates. With me, some of the tallest leaders of India Inc. We begin with Bharat Doshi, Manish Murthy and of course Rajiv Lal. Let's begin with the whole Davos sentiment. Is 2013 better than 2012? And let's start with Mr. Doshi.
Well, the Davos sentiment is definitely everybody thinks that 2012 was the worst and they are like on the optimistic verge. And yet everybody thinks of the possible risks which are on the scenario, whether it be the fiscal cliff or whether it be the euro mess or whether it be still the worries about what could happen if China has a hard landing. Also interesting that 2 years ago, when I came first to Davos, the mood about India was very bullish and we really messed our act. We had the greatest opportunity when things were going wrong in Europe and US. At that point, India's story could have been a very good one because everybody was asking about it. And in the 2 years in between, whatever we did was what I call not a black swan event. It was something which was a man-made event as to how we lost our act in between.
Man-made tragedy is perhaps what some of us would like to call it. Manish, you shared a sentiment that 2 years back we were this big thing that everybody was seeking, wooing, and suddenly we were shunned. Are we back to being wooed again?
I think it will take a lot to bring global investor confidence back. We seem to have taken a few steps which really shook the world's confidence in India. The GAR being one of the largest. I know the GAR is now being postponed for implementation for another 2 years. But that was one of the scariest things. Of course, the retrospective tax increase, almost which seemed like targeting one company, was another one which I think has scared a lot of companies. So if I look at global companies' confidence and sentiment towards India, it is not as positive as it was a few years ago. Definitely not. Having said that, as a market, India continues to be fairly attractive. The growth rates in 2012 were not good, but I am quite bullish that the next year the growth rates can be in excess of 7% for GDP, provided we do some interesting things in the budget. Now, this is a transition year for us in many ways. Elections are coming up around the corner. So I think the question that you have to ask is, is the budget going to be a very safe, conservative budget, not upset any vote banks? Or is it going to be a more adventurous, transformative budget, gather some vote banks? And I think that's going to really decide what India is going to do this year.
You've given me plenty of cues. You've spoken about the budget, you've spoken about reforms, you've spoken about retrospective. I have to touch upon all of that and growth. Rajiv, let me come to you. Do you share that pessimism? Do you share some of this optimism? Are you more realistic? Where is India in the scheme of things in Davos this year?
Last year was definitely very bad. It was almost a binary change from the year before. So this year we are somewhere in between the year before last and last year. So it's an improvement on last year. People are certainly more curious. They're not shunning India, which was the general impression that people carried last year. In fact, it depends who you talk to. People who are in the investment community, especially those who invest in public markets, have actually, their sentiment has improved quite a lot. And in discussions that they've been having here, presumably they'll go back with the sense that maybe their optimism is running a bit ahead of reality. The others who are much more pessimistic, I think, are also recalibrating likewise to something that is slightly more optimistic.
Let's talk about the global picture before we go on to India's specifics. We are seeing a world, and there was plenty of noise the last time Davos happened. Will Eurozone survive as a single currency bloc? What will happen in the United States? Will we see the Republicans versus the Democrats worsen the situation there? Will China have a hard landing? Largely speaking, those three concerns are risks that remain, but they are systemic risks that have kind of cooled off a little. Given that scenario, do you think we are living in a world which is far safer as far as economies and financial markets are concerned than we were in Davos last year?
I think we are. From an economic perspective, the economic risk and financial risk are materially lower than they were last year, for precisely the reasons you just articulated. The most important, not surprisingly, being the USA. The US, in part driven by this whole shale gas revolution, and in part driven just by their pragmatism, I think is going to be the positive story for this year. I'm not that particularly worried about the political shenanigans that people are talking about with respect to fiscal negotiations. One way or another, they will sort them out. One thing that is more worrisome this year than was perhaps last year is the geopolitical situation. So the Middle East, Iran in particular, those areas that are not in a very good situation. Syria continues to be a problem, and there could be an accident there that people are not taking seriously enough.
An accident that is perhaps not being taken seriously. An interesting aspect you bring to this debate. I want to specifically ask you, we were talking about your U.S. He says the biggest thing is that, the U.S. has survived. They've tackled the fiscal crisis, they now have a debt ceiling. Your industry is heavily dependent on that market. I mean, let's not deny the fact that U.S. is your biggest market. There are other emerging markets, there's Europe, but nothing makes up...
U.S. is the biggest.
The U.S. is the biggest. Do you see the risk subsiding there? Are you absolutely certain that the U.S. economy is indeed, however anemic the growth is, it is indeed recovering? And the one big concern that I think last time we spoke about was the fact that everybody thought because Obama is coming on this huge, political, huge backlash on outsourcing, we will perhaps do amends on the ground. Do you think still was political rhetoric, wasn't it?
Well, I think now he has a lot bigger problems. That's all. I don't think it was political rhetoric. I think he has a lot bigger problems. My view is actually slightly different on the U.S. I do believe that the U.S. is recovering slowly. I think from an IT perspective, like you said, for the industry, about between 60 and 65% of the industry is focused on the U.S. I believe that in 2012, spending didn't keep pace with budget. In 2013, spending will keep pace with budget, or at least that's the early indication. And therefore, we will get a little bit of growth going in the market. Having said that, you have the same administration which resulted in extremely low growth in the U.S. and a set of policies which are, high tax and so on and so forth. So the sentiment is not necessarily more positive. The political scenario is not necessarily more stable. I mean, you would have thought that, once the elections are over, the parties would come together. We are not seeing adequate signs of that, and consequently each policy will have to be almost ground out, which means that the U.S. economy will be very, very slow over the next few years. I mean, from an IT industry perspective, I do believe that there will be a little more growth, but I don't think that the U.S. economy will be growing very strongly. And, you have fairly dramatic signs. The interest rates are very low, and therefore one of the largest industries, which is the insurance industry, is suffering because they don't get any returns, right? And because they're not getting returns, they have to figure out what they're going to do also, which means premiums will probably go up, or they have to cut costs dramatically.
Which is a vicious cycle.
Yeah, which is a very vicious cycle. And even the financial services industry don't want to take any risk, so don't want to lend. So I think if you look at all of this, barring a few institutions, my sense is that it's a very conservative. Most people have pulled their heads inside their shell and are just waiting it out.
For the wind to blow out.
Yeah.
While we're talking about headwinds, let me ask you this question. We've spoken about the troubles that plague the world. Do you think India can survive these global headwinds?
Well, it's very interesting that in 2008, we showed the kind of resilience in spite of what was happening around in the world. On the other hand, one cannot say that India will be like insulated. India cannot be insulated. The global currents are going to affect. But there is this large domestic market. There is the environment which is now at least being explained to people that yes, we are in the mood for reforms. Everybody is watching whether we are being credible by the action which will follow. And therefore the action is very relevant. I must here just point out, when Panish was drawing the scenario, one thing which I worry about is that wherever even the brakes are put and you find that at least the calamity is not occurring, the employment situation is going to get worse and worse. Coming back to India, and the vulnerability which it shows is more the political vulnerability. And at this juncture, it looks that the coalition game is going steadily, and instead of every move being just put into a problem.
We started the debate saying things have improved. Are you far more confident than you would have been in the last 4 months of the decisions that have been made, of what kind of reforms that have happened? Some reforms never thought I never thought diesel could be deregulated, but the government is talking about that. Let's begin with you.
I think there are lots of important and ambitious schemes that the government is attempting. The diesel deregulation one, clearly this postponement of GAR by 2 years is a fairly large amount of money which is not going to flow into the exchequer. So if you look at a number of these things, the government is in the mood, let's win the global investor over. I think if that trend flows into the budget, I think we'll have a fairly good year. And I think they have an opportunity to do a really great budget, because it's very unlikely that any opposition party will turn around and say that let's pull the plug on this thing and let's call elections earlier. I don't think anybody's prepared actually right now for the elections.
Neither the main opposition nor the ruling alliance, yes. I have this, when we talk about reforms and everybody's applauding India and everybody's saying the government's got its act together, the fact is that India reforms only on 2 occasions. We are pushed into a corner to reform. There's a rating agency watch. If you don't reform, dude, we are downgrading you to junk. Or, largely there's been a change in political regime as far as North Bloc was concerned. Mr. Mukherjee is out. Mr. Chidambaram's in. He's a goer of sorts, a do-doer of sorts, and which is perhaps why we are reforming. Does it disappoint you a little that we reform, we decide only when we are perhaps pushed into this corner and not on our own?
Well, it doesn't disappoint me. This is the nature of democracies. Winston Churchill very famously said about the United States that eventually they will do the right thing after they have exhausted all other possibilities.
All of the wrong options.
So that is the nature of consensus building. It takes much longer, and it's frustrating. And surely decisions are not made in an economically rational sense and with an economically rational timeline. But that's the price we pay.
Your sector has been at the receiving end of some of the speculation that's happening on budget, because I'm going to start my next round on budget. I'm not going to press the button on budget just yet. But your sector has also seen a very, very sharp slowdown, especially the auto space. And my question really is, we are looking at some kind of a demand slump happen in India. We are also looking at capacities being held back. Where do we go from here on as far as auto is concerned? Because that's a big part of our growth story.
Very interesting. First of all, one should look at a little history 3 years back. And if you look at what one calls the normal trend of growth versus what was happening in auto in 2010, 2011 was a 22% growth, a 30% growth, which was an extraordinary growth. So there has to be a correction. But the second important factor, and this is something which I hope the budget makers don't forget, that auto should be encouraged because it is actually a factor for employment growth. There is proven this thing that if capacities are utilized, if number of auto produced with the employment growth which auto industry generates in terms of the ratio for direct and indirect, it's a very high ratio. So at this juncture, when auto industry has gone down, and as you rightly said, that it may have gone down with that correction which was required, but simultaneously it is dreading some of the tax measures, what would happen to the diesel prices. Those expectations would also have an impact on the demand. And government should not kill the golden goose. And that's something which one should remember.
That's a phrase I've heard many, many times here in the last 3 days, and I'm going to tell you the context in just a bit, but I'm not so certain how happy you will be after he makes his budget speech, the finance minister. While we're at the budget.
But there I want to make one point.
Sure.
It's a very important point. When a particular industry, investment decisions are made on a given basis, and if arbitrarily on the 28th of February, those industry decisions, investment decisions are changed completely or are affected because of a tax burden changing. So just as for emission norms, there is a 3-year notice period. Nobody talks about in 2013 the emission norms will go up like this. Same way for tax, there is nothing secret about it. One could say that we are going to bring 3 years down the line this tax. Prepare your investment plans accordingly. It would not be wrong. Otherwise, you are giving an arbitrage advantage
Right.
to somebody who has a prior information.
Let me be the devil's advocate here. Can any government in the world give you a 3-year notice that I'm going to increase your taxes on a particular sector?
Yeah, why not? I mean, I think
Is it a pragmatic thing to do?
no, wait. I mean, 3-year notice, it can be done in a phased manner. There are all kinds of ways in which information is disclosed to the market. Sometimes it is tactically correct and economically efficient to spring a surprise on the market. But as Bharat's saying, in other instances where legacy investments have been made on the basis of historical tax structures, any fundamental change or significant change to those should normally be phased in. It shouldn't just be a shock to the system.
I'm reasonably certain, knowing his track record, he's not going to bring upon the ghost of Gar on us or a retrospective tax blow. But what would you want him to focus on? He's got a very tightrope walk to do. He's 14 months away from general elections. His party is completely on his case to bring up with a big hardcore populist measure that will boost their voters, their biggest electorate. And then he's under tremendous pressure to woo the rating agencies, keep them calm, keep them quiet, and getting our fiscal deficit under control. What would he do?
I think revenue is the key. And that's why I'm sure that, while it was pretty imperative that he had to postpone things like GAR and so on and so forth, and this retrospective tax increase and trying to distance himself from some of those, is actually costing the government a fair amount of money. And I'm assuming when somebody passes some law or somebody creates a policy, there must be a whole lot of guys who put it into a spreadsheet and say, okay, now the government's revenue, now the revenues will be so much, etc., etc., etc. And therefore now, after that, they start allocating it to various programs. All of that has to change, and my sense is that he has no option because of the fiscal deficit. I don't believe he has any option but to get revenues going. And therefore, it becomes a lot more difficult to be populist, even though it's an election year. I believe that revenue has to be a core focus for the finance minister.
One of the revenue-giving exercises could impact big business cycles like yourselves. There is a lot of public debate whether taxes should go up for the super rich in India. The jury's still out there. Nobody decided what should be done. I think the finance minister has somewhere on one panel said that there is perhaps some merit in the super rich paying a little more. The tax bracket in India, the tax base in India is very, very small. I do not know how super rich will be described, but I'm reasonably certain the three of you will be in that bracket. So, which is why I'm going to ask, do you think it's a sentiment vitiating exercise, or do you think it's perhaps only practical? I mean, one of your colleagues from India, Azim Premji, has broken ranks and said, given the conspicuous consumption that the super rich see, it only makes sense to pay a little more.
I think if you just look at it very objectively, what's been happening is that across the world, there is this thing that, being rich is not good.
It's a bad word.
It's a bad word, you really need to pay a lot more taxes and so on and so forth. The reality is that in India, the capital markets are very favorable, right? You don't have, at the hands of the receiver, you have no dividend tax. You don't have any long-term capital gains tax. Your short-term capital gains tax is actually quite low. And therefore, in my mind, the super rich will always have avenues to structure a bulk of their income coming in ways which are continuing to be taxed.
Instruments like these.
I don't know if it's dodgy. Yeah. I'm just saying that they are tax-efficient instruments. Let me put it that way. I mean, there's a framework which is meant for certain things, and in fact, if you look at what's happened in the U.S., actually, it's exactly the same thing. The challenge is that without a capital gains and without reform on wealth tax and estate tax, etc., what ends up happening is that the income tax itself hits only salaried people, because there are a lot of people who don't get their income in that manner at all. They get it in completely different ways. The advantage in India is that personal income tax is such a small percentage of the total budget that even if you do something, it's just bad news and doesn't give you a whole lot of revenue. You have to look at larger ways to get revenues, I think.
I just would like to add,
sure,
there was a point in time in history, in 70s, when the rate of income tax was 98%, and with wealth tax added, it amounted to 110% taxation. Which
When was this time in history?
mid-70s, around 70s.
I wasn't born then.
Yeah. But I mean, I just thought I must mention. So that's a question of degree. So when you say tax the super rich,
Yeah.
are we wanting to go back there? Or let's look at the mid-90s where Mr. Chidambaram slowly brought the tax rates down.
He's actually a believer in moderate taxation, so I was pleasantly surprised to hear him say that. I mean,
Yeah, and he improved compliance substantially. So there was an automatic psychological reaction to what he did at that time. So he didn't lose out on taxation. It's a question of degree in between. So you can't go back to that mid-70s situation, nor can you look at the type of situation which is the lowest possible tax rate. But the more important point is widening the tax base. It has been talked by many people. Efficient administration and widening the tax base is very important.
Last question, and let's go round the chairs on this. 3 things that the Indian government should do to boost growth, keep sentiment intact, and try and aim to cover the fiscal deficit. 3 things that the Indian government should focus on.
Continue with fiscal consolidation, which means control on expenditure, greater discipline on subsidies, reform of energy taxation, introduce the GST, fuel for power projects.
That's a big thing that everybody's spoken about as far as the infrastructure space is concerned. We've just done so much of talking on power and FSAs and it still hasn't gone through. 3 things.
I think for me, subsidies are a big thing. I do believe that some of it is going to naturally play in our favor with international prices of petroleum coming down and stuff like that. I do believe that the subsidy bill will automatically come down. So even if you don't make a decision, you may just get lucky, and sometimes it's good to be lucky. I actually believe that you have to get back to a little bit of fundamentals, and my belief is that while it's spending on education is really important. You cannot have a market where so many hundreds of millions of people are illiterate and just don't go through primary education, and
it's such a blot on our nation.
It is a real blot on our nation, and it hurts because if you don't invest now, you know that 50 years also later you don't have that future. And if you invest now, you probably have that future. So I would want significant spending to be moving to education. I think subsidies will be cut down, and I think subsidies will get cut down both from a decision-making perspective and from the other thing. And then continued more investment in infrastructure. Our infrastructure is one of the weakest and the poorest. I mean, every international person who comes there really ends up going away quite disgusted with the infrastructure.
I kind of agree with you, despite not being international, being very local, sir.
Well, so while he works on the budget, the growth agenda should not be lost. And the growth agenda particularly arising out of investment encouragement. And when you encourage investment, you simultaneously have to therefore see that the capital markets are not suffocated. So the budgetary action should not lead to suffocation of capital markets and should lead to an encouragement of investment, particularly investment in infrastructure. He mentioned about power, and as an auto industry player, it pains when you see suppliers 50% of the time using diesel generators.
That's right.
Because they don't get connected power. With the type of cost that they incur, you are making the industry, not just the auto but many other industries, not competitive. You can't be cost competitive in the world with such kind of additional power cost which could be avoided. We have got that X completely wrong. And coming to fiscal deficit, that will be his first important target. So he has got a tough act to balance on, but he should not forget the growth agenda.
He definitely has a tough act to balance, and we are not debating that. Thank you very much for talking to us, gentlemen. It's been a pleasure being with you on Davos Direct.
Thank you.
Thank you.